Hi everyone, we're back with Michelle Dean from Peritus Finance, Peritus Corporate Finance, and we're going to be talking about the commercial finance sector again, having a chat through lending and seeing what's been happening the last couple of months since we're starting to come out of lockdown. So Michelle, fantastic, lovely to see you again. What's the latest update for us?
Okay, thanks, Ruth. Yeah, it's good to be back on, and the last so since Christmas really, it's all been a bit stagnant in the market. Little green shoots every now and again when lenders come back into funding, and a couple of lenders have come into the smaller end of the market, which is really good news. And what's happened today is that we've had a lender come in back to 75% in the bridging and refurb market, which is absolutely excellent. Only for loans above 400,000. So it's still a nice low figure, but it might be a little bit low for some. Sorry, a little bit high for some. They'd want to borrow a little bit less. But this lender, really reputable lender, rates about 0.8% per month as well. So they look at refurbs, bridgings, development exits. I'm really pleased about it actually. 75% is unheard of currently in the bridging market. So getting back to that level just makes me feel that we're on our way back to some kind of normality.
Yeah,
and
that's
if one lender does it, then I think that other lenders will follow once they see that it's working and people aren't going to take advantage of it.
Yeah.
But we were doing 75% pre-lockdown. I'd like to think we are going to get back to that. Not every lender will want to do it, obviously, but the ones that I hope will come back, then that they'll probably follow suit, I think.
Yeah. And some of the girls have been saying that, in the commercial, the mixed use kind of residential market, there's been a lot of down valuations. I think it's across the board actually within residential as well. Do you know why that is? Do you think that's just caution?
I think it is caution.
Prices are shooting up. So
yeah, I think the market is very buoyant, but I think valuers, as they have always been cautious and pessimistic, feel that they don't quite know whether to be, go for it and say everything's fine, or whether they're worried about another surge later in the year, what effect that might have, how lockdown is going to, all the restrictions being eased, how that's going to affect it. Are they going to be delayed? And I think that they're just being ultra cautious. Although we had a mixed residential commercial portfolio. We had about 7 reports for this one client, and the difference between their values and the valuer's values was less than 10%. Now, we were expecting more than that, simply because of the way that valuers are reporting, but actually the difference was only about 7. So we were quite pleased about that. And these are proper mixed use, proper commercial units with residential above. So I think
the kind of takeout from that is probably then, when you're doing your figures, allow for that differential in the end valuation.
I think that's right. You always have to allow for valuers' hesitancy in being too bullish. And unless you're coming in low on the basis that you hope you're going to achieve more, so you're being very cautious yourself, then you should always think that the valuer may down value. We've had some come in bang on the money, and yet we've had others that have come in lower. And I've got one deal which is development exit, where the client has 2 different sites, and one that did exactly that. One came in bang on, no problem, and the other was 100,000 lower. That was on a value of 2.2, so it's only 5% lower than what he said, but that's still £100,000. Still a lot of money.
It's interesting with hospitality. I mean, now that we're seeing hospitality coming back, and we're hoping that it comes back with a massive bang.
Oh, we do. Yes.
What is the outlook for that? Is lending easing up for hospitality? That was one of the questions by the sisters, actually.
Yeah. A quick answer is no. Right now,
Yeah.
hospitality is going to take a while for people to have confidence in lending against it,
Yeah.
and probably for the same reasons as a valuer. Nobody wants to go back in it gung-ho saying, oh, everything is going to be great, and then in 6 months' time we find ourselves in the same situation again. So I think hospitality, and probably to a lesser extent retail, but definitely hospitality is going to be a slow, it is going to be slow to get lenders back funding.
The other thing is, we don't know how people's habits have changed either. You know, they're looking to see if people are going to be visiting.
Yeah.
You know,
absolutely. You know, there's been a lot of people saying, I can't wait to get out to a pub garden and, you know, have my first pint or have my first glass of wine out there. And my personal view is, I don't really want to sit in the garden in April in my coat and hat, freezing to death because I can't go inside. I'd rather wait till it's warmer so that I can enjoy it out in the garden. Whereas, you know, I know people that it's been, you know, the first thing that they did when they could was get into that pub garden. You know, I'm in no rush
Me
to
neither.
go back doing anything that I used to do. I can't wait to do it, but I'm not in any rush to do it. I'm happy to kind of, you know, just let things happen a bit slower.
Yeah, exactly. I've got a question here from one of the sisters. She's saying she'd be interested to know if it's okay to shop around with brokers in terms of getting best finance deals, or should you always stick to one? Some have strengths in certain sectors than others, I guess.
They absolutely do. And it's quite a difficult one, because if you've got a commercial finance broker and a mortgage advisor, they're two completely different animals. And the mortgage advisor might be able to help you with a little bit of bridging, but that's really it. You know, you would go to them to get your mortgage to buy your house, and it's very much like a solicitor. You know, you've got your solicitor that you use to do your conveyancing for house purchase, but that isn't the same solicitor that you would use for commercial purchases. They're two different things. So if you have a commercial finance broker and you have the confidence in them, then it's nice if you stick with one. If you go to more than one, you risk having your deal touted around the market by more than one broker. That doesn't look good on either of the brokers. And also the lender starts to think, why is this deal coming in from more than one broker? Why, you know, what's going on here? I'm not giving any different terms here. So it's very important, if the person does want to use more than one broker, that they're upfront about it. And they say, I've got a broker already looking at this deal for me. The only thing is that broker would need to tell your client, tell their client, what lenders they've approached, because there is no point the other broker approaching the same lenders. They're not going to add anything to the situation.
And what you're saying is they're not going to get a better deal, basically.
No, I mean, so yeah, we have access to private funds and the whole of the market, and some commercial finance brokers may not. But then again, if the deal is pretty straightforward, you probably won't need that. You know, if you're coming to me for a refurb where the purchase is 400,000, you've got 300 in bill cost and the GDV is 1.2 million. Me and any other commercial finance broker would be able to place that deal for you, no problem at all. And if you have got that kind of deal, the difference in interest rate is marginal.
Yeah.
So you know, if you came to me and said, I've got rates at 0.8%, I might be able to say I would probably say to you, I might be able to better that, but I'd only be able to better it by like 0.05%, not by much, and probably not enough to warrant taking you away from an established connection with your commercial finance broker. I think it's important that
that's really interesting. So basically what you're saying is the deal is pretty much the same wherever your broker is. You know, your broker's added value is actually in the service they provide to you, making sure that they give you all the upfront costs that it's going to cost, because that is really important for us, all the upfront costs, and that they help you pull your deal together, and that they help you present your deal in the best possible light. You know, that's
absolutely.
It's almost, it's not about the percent almost, because it's so close with everyone. It's about how it's all pulled together. It's the added value that the broker has, you know, on the deal. And that's, you know, that's why we like to use Peritus, you know, because we know that the deal is always going to be presented in the right manner. It's always gonna, we're always going to know what our exit fees are going to be, what all our fees are going to be. There are no hidden surprises along the route. Know that the deal will complete, you know, so it's that is worth a lot more in itself, if you see what I mean. Well, from my perspective, I need to know how much I'm going to be cost, and the deal's going to go ahead, it's going to complete.
Your broker should be there to add value to you. You know, there is no point your broker just being there as a post box between you and the lender. They need to add some value. They need to be able to help you discuss things, you know, sort out problems and queries. That is what they're there for. There is no point you paying your broker just to be a post box. You know, and, you know, I'd like to think that that isn't what I do, and that I do add value to transactions, and, you know, we charge a fee and I think we earn it. So, you know, we don't have any hesitation with that. We're a professional at the end of the day. And, you know, that's what we
I would actually worry if my broker didn't charge me too much of a high fee, because I'd wonder how he's making his money compared to other people. Is he skimping on the time that he's meant to be putting into the deal? You know, how many deals does he actually need to do to make a living out of this? I mean, you've got to think of it in the other way, haven't you, as well?
You do, yes, absolutely. You know, cheapest isn't always the best, and that is probably across the board. You know, I can come to you to flip that on the head. I can come to you with some fantastically cheap terms for a deal, but say to you, I don't think this lender's going to be right for you. I think you should go for the one that is more expensive, because I've worked with these lot and I know what they're like. This other, you know, this other one, they're a new lender. Let's wait and see, you know, what they do first. And that's the type of broker that you need, that is looking out for you.
And balancing your risk levels and making sure that you know about the risk going into that deal. So
definitely.
So I think that's everything for today, Michelle. It's really fantastic catching up with you again. And I'll put Michelle's details below again. So if you want to catch up with her, ask her any questions, find out a little bit more about what's happening in the market, then please go ahead and send her an email or contact her. But for now, thank you very much, and I'll see you next month.
Thanks, Ruth. See you then. Bye everybody. Bye.